Good afternoon. This is Brian Shannon with Alpha Trends Blogspot. It is Tuesday afternoon, August 8th, 2006. We're looking at a 1-minute chart of the S&P 500, the spiders here, and the market got the expected volatility that we were looking for after the Fed announcement at 2:15 Eastern, and in the end, it was the sellers that prevailed here. Like I said yesterday, today was a good day for less experienced traders to probably sit on the sidelines and just because the volatility gets so big. Here again, we're looking at a 1-minute time frame, and you can see the enormous volatility that the market had, and it's very, actually pretty common for it to be about like this. So, the initial reaction was a rally, came up right close to the daily R2, and then a very swift and severe sell-off down to daily S2. Then we saw some bouncing back around, went back actually above the daily VWAP, and in the end settled a little bit lower with just a little bit of a bounce here towards the end, into the final half hour, 15 minutes of the day. Looking at a 10-minute time frame, we can see that the uptrend line that we've been looking at has been broken, and the market closed below there. It also closed below this prior level right in here, right about at that level. So this market remains at a important area. However, it is experiencing volatility. Volatility tends to peak at turning points. So we have to take this pretty seriously here. I'm not going to get into the economic ramifications. I'm not an economist, just a trader, so I'm not going to make any commentary at all about what I think if the Fed did the right thing or whatever. But the point is, from a market standpoint, we're at a critical area where this prior gap area looks again like maybe it's acting as a little bit of support, but we've got clearly some resistance up ahead here at about 127.50 as well. So we still don't have any decisive answers as far as what might be next for this market. So we have to continue to just take things slow in here and wait for more pieces of the puzzle to come together before we can really make any more informed type of decisions. So, it was this trend line that was broken, and now we've got that, what's actually looking like a shoulder, a head, and maybe another shoulder. And again, these false moves, like we saw a couple days ago, tend to lead to fast moves. We get these, moves towards the end, the strength on a gap towards the end of a rally like we've seen here into an important level of prior support, which is now acting as resistance again for the second time. And we've got this market looking like, well, maybe it's going to come back down and test the 50-day moving average. It's impressive to see that the buyers were able to hold it up above this 200-day moving average here on the S&P 500. I think maybe we get a little more weakness, maybe down towards that 126 level would still be okay for the S&P 500, but again, we've just got to, I think, keep our trade shorter term in here. The Nasdaq 100, let's take a look at that 1-minute time frame. We can see the same type of volatility in here where we had not maybe quite as huge of a range based at least on the daily pivot levels, but we did get support twice down near this daily S2 in here, and finished up with a little bit of strength again here in the last half hour, 15 minutes to half hour of the day in this Qs. So looking at a 10-minute time frame for the Qs, we can see this chart is just a mess. I mean, if you've been having a hard time finding anything that's trending in the market lately, or at least in the Nasdaq side, here's why. I mean, this whole thing is just a mess. The biggest level of importance remains down near this 36.25 level, and you can see we tested that in here today. So this level, and let's back it up a little bit to a 30-minute time frame, we can see the importance of this 36.25 area. Breaking below there puts this market back on the very extreme defensive. We're still in a downtrend, so we've got to still be defensive automatically. Here we're looking at an hourly chart of the Qs, but this level is definitely important in here, and breaking below that could lead to a test of the year lows right down under the 36 level. So let's continue to let the evidence mount and decide what we're going to do based on the individual actions, because that's individual action in the stocks, because that's, again, what we remain in a stock picker's environment, and this market needs time to heal itself. Let's take a look at the stocks we've been mentioning and in. Foundational Coal Holdings, symbol FCL. We were in this stock yesterday. I'd suggested a stop up near this level. That stop wasn't hit. Right now, I would say you probably want to lower your stop down towards about 37.50, thus locking in maybe about $1 if you are still in that one. BDCO, Blue Dolphin Energy, right idea, I guess, because it gapped, grabbed higher. Should have owned it yesterday, I guess, but the stock failed, came back in towards the end of the day. Because of that gap higher, there should have been no play, so hopefully you're not involved in this stock. Doesn't look like a reason to have chased it. KTCC, I had suggested that we wanted to buy this one above $6.90. That occurred right here with a stop then below yesterday's low. Yesterday's low was right here. I would say that you probably want to raise your stop maybe about to 675, 680 for KTCC. Stock still looks good from a bullish standpoint, so might as well give it the benefit of the doubt. NGAS. On NGAS, what we were looking for here was a slight pullback before we got involved. We didn't get that pullback. We had a gap, in fact, early on. Check the comments from yesterday's video, last night's video as well. There's someone in there, I think he called himself Gold Guru, had a nice posting about NGAS if you're interested in learning some of the fundamentals of the stock. Maybe we'll revisit this in the next day or two, but right now I would say you shouldn't be in the stock, so we will move to stay on the sidelines for now and there. TXCO, exploration company, we're looking for a move above yesterday's high before we got involved on the long side. That didn't occur, so no reason to be involved. And ISRG, what we were looking for here was to sell this stock short on some strength below 96.20. You can see today's low was about 96.30 something, so no trade in ISRG today. And I suggested maybe you want to be involved in puts in this stock because it is pretty choppy too. And I think that's probably the better way to get involved, just like it was with this NIHD. That I had mentioned. I bought puts yesterday, and it was nice to be in the puts because I saw this early on strength, and first it gaps higher today, it sells off, then it rallies up. Just a real choppy stock, and probably much better suited to some options where you don't have to experience these extreme choppy moves in here. So I think that NIHD is better suited for options and put options in here right now. So that's about all I've got for now as far as our wrap up for today goes and the stocks that we've mentioned. So I will be back this evening with another video. Thanks for your time.